Hey everyone, Mike here again. This week we're going to be talking about 3 dividend stocks that didn't quite perform as well as the market last week. I'm looking at possibly throwing a little extra money into those stocks and increasing my positions. If you like, you can hang around toward the end. I'm even debating on opening a brand new position with a new stock. I'll tell you what that is and why I'm going to buy it. If you'd like to get started on this journey with us, click that Robinhood and M1 link down below. Toss your money in. We both get some free stocks. And without further ado, let's get into the video. All right, everyone, thanks again for joining. If you'd like, please click that like and subscribe button down below so we can keep making more content. We're going to talk about 3 dividend stocks that didn't quite perform as well as the market last week. While the S&P and the NASDAQ all hit record highs, there were a few stocks lagging behind, but I also think they offer good buying opportunities. So the first stock we're going to talk about is Coca-Cola. Coca-Cola saw a little bit of a downturn this week as they were downgraded by several analysts, and mostly due to the coronavirus. Their earnings haven't quite been where they should be, and they believe they're not going to be there for the next few quarters. As we all know with Coca-Cola, we all buy it and drink it and get it from the grocery store, but a lot of their revenue is made up from restaurants and product licensing, and right now that's taken a pretty good hit. So over the past week, Coca-Cola is down almost 6.8%, and that's even with a little increase on Friday. Friday, I believe they were up almost 2%, so they were doing well below 8% for the week up until that last day. So I think this is a pretty good pullback on Coca-Cola. I'm definitely looking to increase my position. Right now I have 5 shares for around $45 per share. So I don't mind buying at a little higher of a price. I know Coca-Cola is a good company. They have slow and steady growth. They're obviously a dividend aristocrat with around a 3%, 3.5% yield. So I don't really think you can go wrong owning more Coca-Cola. You know what you're getting. You're getting a good, solid company, probably one of the best. You're getting a good dividend yield, but you're just trying to get it at a good cost. And I think this past week, with the way the shares have dropped, pretty much due just to the coronavirus, I'm thinking you're looking at least a 10% gain by the end of the year. So I'm going to definitely try to get a few more shares of Coca-Cola and try to increase that position in my portfolio. And let's face it, Coca-Cola isn't going anywhere. For over 30 years, I've watched my dad suck down almost a 2-liter a day. Coca-Cola is going to be just fine, so whenever it dips, you should buy it. Now, the next stock on the list is going to be 3M. As you know, I went over my portfolio in an earlier video. I'll link that at the end. I've only got a fractional position on 3M, so this is a really good time to try to add to that position and kind of buy that dip. As we all know, some of the larger products from 3M are going to be the hospital tapes that you use, which I use. That's how I knew of 3M, and obviously they're the Post-it maker. So, that's kind of what they're known for, Post-its. But for me, being in healthcare, I use all types of their tape. If you're a nurse or any kind of healthcare technician or rad tech, you know what I'm talking about. Now, if you're a healthcare worker, go ahead and drop a comment below. Tell me how much you like that paper tape, and I'm going to call you a liar because it's terrible and it sticks to nothing and does nobody any good. As much as we know 3M for their Post-it notes and their hospital tapes like we talked about, they also have other brands such as the Scotch-Brite cleaning utensils. They also do a lot of the Scotch tapes and painter's tapes. So there's always a lot more products than you ever think of a company would make. They just might have different branding. So I'm definitely going to buy some more 3M stock. Let's get into some analytics right here. And looking at the chart here, 3M is down almost 5%. And without much good reason outside of the election. The industrials sector is kind of slowing down a little bit just with the blue wave that's been going on with the Senate and the Congress and the president now being, full Democratic control. I think there's just a little bit of a pullback here with a little uncertainty of how that's going to affect their operations. So with a 5% pullback, I'm definitely trying to increase my position on 3M. It's a good buying opportunity. Again, I'm going to pretty much buy 3M at any price. So anytime that we can get a little dip like this, I'm going to try to put a little money into it. So the last stock we're going to talk about is Realty Income. This is the monthly dividend payer. Realty is a REIT, and they specialize in owning real estate that are occupied by businesses. Just looking at the list right here of their top 20 tenants, you're going to see the big names: Walgreens, 7-Eleven, LA Fitness, Walmart, but you're also going to see some duds. You're going to see some things that are a little scary with the way the Rona has hit us. You're looking at Regal Cinemas. I mean, the movie industry has taken a huge hit. LA Fitness, with the way that the Rona has hit us, gyms are having a really hard time staying open. So then it turns into, are these guys going to be able to make their payments to O Realty? And I think that has really kind of hit them a little bit and had their stock pull back in price. If we're looking at the price of O Realty over the past 5 days, they're down almost 4%. If you look at year on date, they're down almost 20%. So I still think that there's really good growth to be have with O Realty, especially once the vaccine gets out and we can get back to life as normal. Again, they are the monthly dividend paying company. Right now, their dividend yield is around 4.7%. And again, you kind of divvy that out every single month. So I really like O Realty. It's pulled back a little bit. I'm going to, again, try to dump in as much money as I have and see if we can increase our position in this over the course of the week. This is a top quality stock, and that's what we're looking for, is top quality stocks that when they pull back, you're able to put your money in, get a little extra growth on top of those dividends that we're investing for, and get that snowball running even faster. So the fourth stock I want to talk to you about is Texas Instruments. I don't own Texas Instruments, but I would like to. They have been steadily climbing ever since that first initial Rona period. Year to date, they're up almost 31%. But that's not all that interests me in Texas Instruments, is that they're just continuing to grow year over year and grow their dividends specifically. Let me check out some numbers here. So over the course of the past year, like we just said, Texas Instruments is up almost 32%. And within the last week, they're up 5%. They have a little bit of a lower dividend yield, around the 2.3 range, with a $4 dividend payout per year, but only a PE of 31, which isn't the worst. I mean, obviously we like that a little bit lower, but I think this is a good opportunity to still get in. I think there's some run out of Texas Instruments. I don't think they're going to slow down at all. Looking into their dividend, they've been growing their dividend for over 17 years. But what's more impressive than that is that their 10-year dividend growth rate is over 22%. And that's pretty great. What's even more significant, as you see here, even with the whole COVID-19 situation that we've been dealing with for the past year, the company brought that dividend up almost over 13% in September. In the years before, they were doing 16%, 24%, 24%, and 31% back in 2016. I mean, those are huge numbers. So if they can do that during the whole COVID crisis, the future is bright. And I kind of want to get in on it now before it's too late. So what I'm looking at is possibly trying to find a red day this week, a day where it might sell off just a little bit. And I'm looking at dumping my entire stimulus check into Texas Instruments. That'll get me about four stocks, 4.25, somewhere in that range, just the math off the top of my head. But I think it's a good time to open a position on Texas Instruments again. I don't think it's going anywhere. I think it's just going to continue to run. They're going to keep growing that dividend. And I just think it's a great time to get into this before everything opens back up. And looking into some of the analytics and the things that I'm reading, it's just the next company that I want to add to my portfolio. So there you have it, guys. 3 positions I'm trying to add to, and possibly another company to add to the dividend portfolio. Again, if you like the information provided, go ahead and hit that subscribe button, drop a like, it helps us out. Also, don't forget the Robinhood and M1 Finance links down below. And I hope you have a great day, a blessed tomorrow, and we'll see you soon.